Point number 5. People have said that with American exceptionalism being over, and with us having weaponized the US dollar for national security and foreign policy purposes, and with all this talk even about a Mar-a-Lago agreement that should lead to a weakening of the dollar because the dollar is too strong, or even people talking about imposing taxes on capital inflows in the US because we don't want excessive appreciation of the dollar that leads to deindustrialization. People said all this kind of signal implied that people are going to want to diversify away from dollar assets. If you're a rival of the US, say China, and you've seen what the US has done to Russia, to South Korea, to Iran, then you know that you might be also sanctioned. And as they say, if I owe you $1 billion, it's my problem. If I owe you $1 trillion, it's your problem. So China having so many dollar assets is risking them to put them in a situation of fragility and so on. And it's not just the rival of the US, but even those who are the frenemies of the US are worried that if we impose primary sanction on China and then they don't follow it, the South Africa, Brazil of the world, they'll be subject to sanctions. So everybody wants to diversify out of the US dollar. That's the argument for why there'll be de-dollarization and the role of the dollar as a global reserve currency is going to be over. However, you cannot replace something with nothing, point number 1. And point number 2, if you don't like the dollar, what is the alternative to the US dollar? And my former advisor at Harvard, and he was my boss when I was at US Treasury, Larry Summers, famously said, it was a bit of a joke, it was not a nice joke, but he said, people don't like the dollar, but what's the alternative? He said, Europe is a museum, China is a prison, Japan is a nursing home, and Bitcoin is an experiment. So people don't like the dollar, what's the alternative? Important point and valid. Additionally, ask yourself what's going to happen to the US current account deficit, our trade deficit. In spite of the tariffs, it's not going to shrink. It's not going to shrink for the following reason. From a macro point of view, the current account is the difference between national savings minus national investment as a share of GDP. The current account is a share of GDP. Savings, private and public in the US, are not going to fall very much or increase very much. They're stable. But investment is going to have a boom. Capital spending is going to boom because of the AI and the industries of the future. So if you have an investment boom and savings are the same, by definition, regardless of what tariffs are, your current account is going to become bigger. It's like a firm that is a growth firm, has lots of capex investment, doesn't have internal savings, meaning retained earnings, and has to borrow equity or debt in order to finance that investment boom. Or an emerging market that discovered natural resources has to invest into it, and initially you have a current account deficit because investment goes up and savings are similar or not changing. So US is like a growth firm, or an emerging market is in a boom. So the current account is going to widen, but this wider current account deficit is going to be financed by inflow of capital. In my view, more equity than debt. Could be FDI, greenfield or brownfield, could be venture capital, could be private equity, could be portfolio investment, but it'll be a massive inflow of FDI to finance this current account deficit. A lot of it is going to be equity rather than debt. So among the foreign liability of US, the equity ones are going to rise more than the debt. And that's why they're going to be more sustainable, because the return then are going to be able to pay back the investors. So current account deficit is not going to shrink, even with tariffs, just because from a macro point of view, we have an investment boom, and therefore the inflow of capital into dollar assets is going to continue, and therefore the exorbitant privilege of the US dollar as a major global reserve currency is not going to be over. Final point I'll make on the US dollar. This year, the US dollar has weakened. All this talk about weaponizing it, politicizing the Fed and trying to reduce independence, and maybe the Fed's going to cut interest rate too much too soon. A bunch of cyclical factors. And the euro that was almost at parity with the dollar beginning of the year is now, depending on the day, 117. It's gone up by more than 15%. But think of it in the medium-long term. In the medium-long term, the real value, the real exchange rate of a currency depends on growth and productivity differentials. If a country growing faster, the real value of its currency in real terms has to be appreciating over time. So look forward, not today, 5 years down the line. US growth is going to be 4%. Eurozone growth is going to be stuck around 1%. And therefore, massive amounts of inflow of capital are going to come US to finance our economic boom. The dollar is going to become stronger, not weaker. And actually, the euro has to become weaker in order to gain some competitiveness through exchange rate. So in the short run, the dollar weakness may continue. But over the medium term, I think the dollar with exorbitant privilege remaining, with American exceptionalism remaining, with growth accelerating, with the returns to new firms and existing one accelerating, the dollar can strengthen over time. So the pessimist that says the dollar is going to be in a free fall for the long term, I think, is unwarranted. So these were the 6 elements of the new conventional wisdom, pessimistic, and I gave you one by one in a very quick, short way why I think that there is conventional wisdom is negative about the US is wrong. American exception is not over. The exorbitant privilege of the US dollar is not over, even if the road is going to be bumpy, because of course there'll be correction, there'll be noise and so on. But the medium term looks, in my view, bright for the United States. Thank you.